Welcome back. In today's explainer, we're diving straight into a massive corporate shakeup, objectively breaking down a major ASX announcement from Ariana Resources that dropped on May 18, 2026. This is a genuinely fascinating look at how companies actively manage their chess pieces, moving capital from one side of the globe to the other to fuel some serious new development. Let's get right into it.
Okay, we have to kick things off with this absolute monster of a number, 19.5 million US dollars. This is the gross cash proceeds from Ariana's recent stake sale in a joint venture called Zenit. The deal was fully inked and the cash actually received on May 15, 2026. You know, in the world of resource development, an injection of nearly $20 million in pure cash, that's a total game changer. It completely reshapes a company's balance sheet and entirely alters their operational runway for the near future.
To make this all perfectly clear, we're splitting this explainer into 5 quick parts: the Zenit stake sale, strategic portfolio optimization, advancing the Dokwe Project, the financial and accounting impact, and we'll wrap up with our important legal disclaimers.
Starting with Section 1, the Zenit stake sale and the exact details of the asset transfer.
So, looking directly at the official announcement, Ariana agreed to carve off a 13.6% slice of its interest in Zenit Madangilic. They sold this to an existing Zenit shareholder, a company called Ozalton. For that 13.6% piece of the pie, Ariana secured those gross cash proceeds of $19.5 million we just talked about. But of course, after paying the local taxman in Turkey where Zenit operates, their estimated net take-home is sitting right around 17.2 million US dollars. And this brilliantly illustrates what the new ownership structure looks like post-sale. Ariana isn't totally walking away from Zenit. They're actually holding on to a 9.9% minority stake. Praxia Construction keeps their 23.5%, and Ozalton really consolidates its power, stepping up to a dominant 66.6% lead. What's absolutely crucial to take away here is that by keeping that 9.9%, Ariana still gets to collect future dividends, and they critically keep their seat on the board. So they've taken a massive pile of cash off the table, but they still have a foot firmly in the door.
Moving right along to Section 2, strategic portfolio optimization, and the underlying rationale for this move.
Listen to how Ariana's managing director, Dr. Karim Sener, explains this. He calls Zenit a mature, cash-generative minority investment. By selling off a chunk right now, the company is purposefully crystallizing significant embedded value. In the finance world, crystallizing value essentially means taking your paper gains, the hypothetical value sitting on a balance sheet, and turning it into hard, usable cash. They're purposefully cashing out of a mature, steady-state operation so they can fund a completely new phase of exponential growth.
Which brings us to a massive concept here: non-dilutive funding. Usually when a mining company needs to build out a huge new project, they have to issue millions of new shares to raise the cash. That dilutes the value of everyone who already owns the stock. It's like slicing up pizza into smaller and smaller pieces. But by selling the Zenit stake, that $19.5 million is entirely non-dilutive. Ariana is financing its next colossal project without asking its current shareholders for a single dime and without shrinking their slice of the pie. In today's highly volatile macroeconomic climate, preserving your shareholder structure while raising capital is a brilliant strategic priority.
All right, on to Section 3, advancing the Dokwe Project. Let's see exactly where all that capital is going.
We're seeing a drastic geographic and strategic pivot here. The funds are moving straight from a reduced minority 9.9% stake in a mature Turkish operation and being reallocated to fully fund the feasibility study of the 100% owned Dokwe Gold Project in Zimbabwe. This is portfolio optimization 101, right? You harvest the cash from an older, well-established asset where the growth curve has kind of flattened out, and you plant it directly into a fully owned, early-stage asset where the upside potential is, theoretically, much steeper.
We spared you the headache of looking at the massive JORA resource table from the announcement and just pulled out the gold for you, literally. Depending on the cutoff grade they use, whether that's 0.3 grams per ton or a tighter 0.6 grams per ton, the Dokwe Project is sitting on over 1 million ounces of contained gold. At that 0.3 cutoff, you're looking at nearly 45 million tons of ore, yielding roughly 1.4 million ounces of gold. Ariana is calling this a transformational, large-scale, long-life asset. So that Zenit cash, it's earmarked to fast-track this exact project through its feasibility study and straight toward active development.
Let's pivot to Section 4, the financial and accounting impact.
The immediate bottom-line reality here is that Ariana Resources is now sitting on a serious war chest of about 53 million Australian dollars,
which is roughly 29 million British pounds, in pro forma cash and investments. On top of that, they're carrying zero debt. Zero. That is a wildly comfortable and rare position to be in within the resource sector. From an accounting standpoint, there's a big shift too. Since July 1, 2025, they dropped the equity method for Zenit and started measuring it as a financial asset at fair value through profit or loss. To give you some context, that 13.6% stake they just offloaded had an attributed fair value of 10.1 million pounds on their books at the end of 2025.
The paperwork confirms that any ultimate profit or loss on this specific sale, comparing what they got paid against that book value, will be totally reconciled in their next set of financial statements. This isn't just accounting jargon. This shift is designed to give anyone reading their upcoming financials a highly transparent look at the true economic reality of their portfolio. It provides a crystal clear line of sight into exactly how much value is actually locked in with this deal.
Finally, Section 5. Important legal disclaimers.
Just a quick but absolutely critical note before we wrap up. This explainer is strictly for informational and educational purposes. It's derived entirely from the May 18, 2026 source text provided by Ariana Resources. This does not constitute financial or investment advice, and it is definitely not a recommendation to buy, sell, or hold any securities. We are just here to objectively break down the corporate mechanics, not to tell you how to play the market. Always do your own research and consult a licensed financial professional before making any investment moves.
So, there you have it. We've laid out the facts on this massive strategic reallocation from a producing asset in Turkey straight into a 100% owned development project in Zimbabwe. But honestly, the best part of these explainers is the conversation that happens afterward. So, what's your take on this strategy? Does cashing out of a mature, steady asset to bankroll a larger but earlier stage project make sense to you? Drop your thoughts, your analysis, and any questions you have down in the comments. We absolutely love reading your insights. Until next time, keep analyzing, and thanks for watching.